14 February 2023, Tuesday. Happy Valentine's Day to everybody. Now, today is a big, massive video. My goodness, more than 20 slides for you guys. And I've been collecting data since morning, and the data kept coming in, and there's so much to share with you. In fact itself, today will be a very special MAO. I'll split the fundamentals, the news in front, then the technical at the back. Two different videos for today, so let you have it. Now, shot down UFO objects. Well, guys, I've been saying this a long while. I always believe that aliens exist in the world. Right? Who knows? Some of you are aliens. Anyway, this is one thing, but the White House just came in and said that nope, no such things. I'll share with you later. And many experts apparently are giving the CPI hint tonight. And the scary part is that it's not only one, not two, but a couple of them. And some of the bigger funds are liquidating position ahead of all these data. I'll tell you more in detail. Watch this. This is a must-watch video for today. But once again, disclaimer apply as usual. Please make sure that you do your risk assessment. And thank you, AIMS, for the kind sponsorship. Now, first of all, let's recap what happened last night. Wow, the Dow Jones recovered 376 points last night. Wow. Nasdaq up by 197, S&P up by 46 points, and you can see across the board, Microsoft up by 3%, Apple 1.8%, Amazon 1.9%. Okay, pretty good, right? So of course, the first thing in my mind was, how about Tesla? Oh gosh, Tesla went down instead, 1.14%. Now this is quite interesting because, I mean, the whole market was up relatively, especially the tech sector, and yet Tesla maintained below the 200 level. So this is actually a warning sign in my opinion, because I find that Tesla has a very interesting link to their market. And if Tesla is not going to do well, right, usually the market later on may not do that well. So of course, the thing is this, what is the reason why everybody is buying ahead of the CPI data? Well, apparently, it seems that everybody is kind of confident that the CPI data tonight will be better than expected. In fact, it's right. It seems that the investors are putting a solid bet that today the inflation is cooling, and there's a reason why that the Federal Reserve will pause or pivot. Okay, so it's again the same thing that the market is actually talking about it right now, saying that the inflation is okay, it's coming down right now, don't worry, Fed will pivot. But the point is that Federal Reserve have been saying that they will not pivot so fast, but Wall Street is still buying under it. So I just wonder here itself, is that Wall Street know something about the Federal Reserve, or the Federal Reserve is the one that's basically fooling everybody off? So this is something incredible today. Let's look at Tesla right now. This is Tesla share. Okay, you can see very clear Tesla shares has been doing pretty well. It has bottomed at 109, the level that I mentioned. Okay, beautiful. And when it was going upward itself, right, I told you guys a volume actually accompanied it. Now, it's very clear whenever you have an upside after a very heavy sell-off, okay? Alright, you can see usually heavy sell-off come with volume, means they start selling. Then at the low itself, you have huge volume. That's where the buyer and the seller fight each other, and usually the bulls will win if the market is going to recover. So now with the market going up with volume coming in, that's a good sign. That's why the Tesla go all the way up. Now I was already saying that maybe about 160 to 170 is take time to take profit, right? But 173 is a good time to take profit. So I was wrong, because why Tesla went all the way up. Now, I want you to understand this, guys. This is the 150-day moving average. And the last time we saw this happen, that was back in October last year. And after that, Tesla share goes all the way down. Now, we are very near to this point right now. And very interesting, we have the iron reversal here. And as I said again, yesterday, the day before, Nasdaq was up, right? And yet the Tesla share coming off. So this is not a good sign. And I feel that Tesla might be coming down to 173 again, all right? And of course, if things don't get too good, alright, there's a very huge gap between 173 to 143. So guys, be very cautious to the wind. Be careful of that. Now, in terms of the volume, it's also coming down a bit. So that's another worry sign. And of course, indicator, we are at a very overbought region. Okay, so that is my view on Tesla, to be pretty careful for today. But of course, the main thing is, take a look right now. Tesla short sellers are having a very bad time, alright? Apparently, the S3 partners. Apparently, now, Tesla short sellers made hell of money last year. I mean, if I remember correctly, $50 to $60 billion. But as of today, right now, they lost about $7.56 billion mark-to-market basis on the last 30 days. Okay, just 1 month losing $7 over billion. Oh gosh. Alright, so that's the in total, yeah? So For per S3, the hedge fund says that in total they lost about 2.6 billion as of now, and of course it's nowhere near to the Apple shorts, Coinbase short, Microsoft short, and Lucid shorts. Okay, so Tesla apparently is still one of the highest, if not the biggest, amount of short sellers on them. So of course, if the price pulls back, of course the short sellers will add in position to pound it down so that they can quickly get out. All right, this is how I feel it. So guys, be careful on Tesla. All right, just be careful. Now, I told you aliens are among us. I said that before many times, and obviously people say that I'm crazy. But today on Bloomberg, says that Pentagon shoots down more aerial objects and doesn't rule out aliens. Oh, cool. Okay. All right. So of course this is like a meme joke here itself. All right. Then because it's from Bloomberg, right, that gives a bit of weightage here. All right. So that's why I went a bit deeper, and I went to take a look here itself. Very interesting. So apparently, it's not only on Bloomberg, apparently it's also on different places like Yahoo News itself, ruling out aliens. Senior US general says not ruling out anything. Interesting. And of course, we have Bloomberg saying again, US is shooting down UFO, unidentified objects, with the $439,000 missile. Wow. My goodness. All right. Okay. So Reuters says that ruling out aliens. Nope. Okay. Same thing. All right. So across the board, we have seen this on the mainstream media. Okay. Now I come up with my own stuff. And the thing is this, they actually have a video interview with talking about that. And the title is, they haven't ruled out alien origins. So let's take a look at this video and see what you have to say on this. This is going to be cool though. Okay. Let's go.
After I think the U.S. has rarely shot down any objects over its own territory. Now we have 4 in a couple of weeks. What do we know?
Well, Matt, we know close to nothing so far about these last 3 objects that have been shot down. The Pentagon has been pretty tight-lipped on details. We haven't, no one has found the wreckage of these things so far. We don't know if they were balloons. We don't know if they were spy craft. We don't know if they were college atmospheric experiments that floated away. We know close to nothing. But it has ratcheted up tensions between U.S. and China. China today coming out and saying that they have spotted or identified 10 U.S. balloons that have flown over their territory over the last year. So this story is continuing. As you said, every morning we wake up with reports of something else in the skies.
Yes, and it's interesting, the things we don't know about here, Bill, when you hear about this phenomena or these events taking place, you wonder, are there more of these objects? You also wonder if we're just looking harder for them, and we've heard from the Pentagon that that's part of what's been going on here. But you also wonder about the politics, if previously we've just reacted in a very different way to spotting this kind of thing. So how is the politics playing in here?
Well, it's definitely a factor. I mean, you'll remember with that first balloon that was eventually shot down off the coast of South Carolina, the Pentagon later said it had been tracking it for a few days before it became public knowledge. Only when it was spotted by civilians and there was a lot of coverage of it did it become more of a public national security issue. We don't know. The Pentagon has said that it's basically recalibrating some of the ways it looks at the atmosphere to better identify slow-moving objects as opposed to maybe a fleet of incoming enemy fighters. It's looking for things differently, and it seems to be seeing more things. Again, though, we don't know. Some of these objects, the Pentagon said, were just floating in a zone that was dangerous for commercial airliners. We don't know that it was dangerous for national security. Those are the kind of things we're hoping that come out in the coming days.
All right, so apparently, what do you think, guys? All right, I think this video didn't really talk about that, about having an alien here. But of course, in the report here, you can see that if the US has excluded the possibility of the object shot down over Alaska, Canada, and Michigan were aliens or extraterrestrial. All right, so it's actually mentioned here. Okay, anyway, but the thing is this, well, we are going to go gaga on the alien thing. Well, apparently, the mainstream media came out. So from our very own Channel News Asia, who re-forward the article. So that was what happened earlier, right? Yeah, the article was here from Reuters. That was in Channel News Asia. But 4 hours ago, Reuters came out and said, you know what? No, not aliens. Okay, US rules out extraterrestrial in object shooting down. Okay, so now, no more. Oh gosh. Okay, guys, leave it alone. But that is the thing of media. All right. Okay, let's move on. Now, the thing is this. I wonder if JP Morgan is really the jinx here. Now, remember, guys, when the market was coming down, we were also mentioning that the market has to stay afloat at this particular area at about 3,830 zone. All right, remember that? Okay. So the S&P 500 was just toggling around here for quite a few days. And then we have this guy, all right, Marco Colonovic. Okay, he came in and says that, right, he's outright negative on stock. And the date that he was very negative was exactly here itself. Okay. So Marco came out and said he's so negative because there's too much positive sentiment. The economic data is coming out weaker, and he see hard landing. Okay, so the moment he says that, the stock market rally. Oh my goodness. Oh gosh. Okay. So I think probably Mike Wilson sees that his compatriot itself also calling for negative, right? So he might have slapped his health in his head. Palm. Okay. Okay. Anyway. Is it really he did it on purpose? But apparently for 2022, right, he had been outright wrong. He called for buy, the market goes down. He called for sell, the market goes up. So not too sure about this, but I want to share this with you guys. 4,200 is definitely a very important Fibonacci level, and I believe that if the S&P can go to 4,002, it will be a very good price to take a short. Okay, I repeat. If the market comes to 4,002, it'll be a very good price to take a short position, all right? Because we all know that the numbers are not that fantastic on the earnings, and with more potential problem coming in, why not? Now, the S&P 500, if it pulls back down, it may be going back to the 150-day moving average, and that's about 3,950. And of course, I think Mike Wilson is still waiting for his 3,900 level that he has been saying. So we will watch it. I got something to cover on him. Let's go. All right. Fed officials are actually giving a bit of CPI heads up. Now, this is whether you believe it or not, right? Apparently, Michelle, all right, one of the governor actually came in and says that, right, it's very difficult to gauge the inflation right now, and there could be that we must watch very carefully on the upcoming indication. Obviously, I think she's probably looking at the CPI data, and it seems that they are quite concerned about this coming CPI data. And if you look at it right now, right, if you look at the 2-year yield, it's very clear that the 2-year yield is very, very close to the Federal Reserve Fed Fund, and we are reaching the 5% mark in the near term. And of course, the last time we see that was back in the 08, 09, the 06 to 08 period. And after that, the Lehman crisis happened, we have the recession, okay? So this is something that if you look at it, if anything to tell you about a double high here, then that is one reason to watch out for. But the thing is this, okay, CNBC today actually came out with a very interesting article. It reports that Tuesday has a potential to deliver some bad news. Apparently, economists are saying that the CPI data should show a 0.4% in January, which will translate to about 6.2 annual growth. Okay, that's within good, because the last time was 6.5, right? So, but then again, they added on and said that there's some indication the number can be even higher. And if that, of course, that will harden the position of the Federal Reserve. The question is, why? Well, apparently, we all know that Cleveland, all right, they has this very incredible way of the tracking of the CPI, and they've been pretty spot on. And apparently, based on the last number, they felt that the number can go actually higher. And the thing is this, Cleveland Fed says that their methodology outperformed the high-profile forecaster. So if that is the case itself, right, this number tonight, if it's going to be anywhere lower than 6.2, the market going to rally, all right? So I repeat myself, 6.2, right, the market going to shoot up, okay? If the market come out like 6.4, 6.5, or worse, 6.6, wow, the stock market might be selling off initially, okay? So again, traders, you need to watch out for this because you really doesn't want to be caught on the wrong side. To me, it's very simple. If you think that the market is going to be still positive, you just continue to hold a long position that you have long. If you are looking to short the market, then maybe put a small little short with a tight stop loss. I think that would be rather helpful, okay? Now, of course, CNBC, as you know, is always pretty positive. So come out a negative report like this, it's a bit of a question mark, yeah? But when Larry Summers come out and tell people that to brace for turbulence as the Federal Reserve and inflation reality comes crashing in, and that was yesterday, okay, wow. Why? Is that because that everybody received the CPI data already? Why is everybody like so in the forecast mode? All right, so Morgan Stanley Strategies, which is Mike Wilson, says stocks ignore the Federal Reserve earning reality. In fact, the strategy says that the bear market bottom will be only coming in spring. That means that in a few more months. And in fact, he mentioned that the Fed hikes during this earnings recession will spur more decline. All right. Well, we all know that Mike Wilson is bearish, so maybe he's just biased with that. Well, let's take a look over here right now, everybody. This is the equity rally. Now, of course, the start of the year we have very good rally. That's why you can see that overall it's pretty good, right, for this year. But of course, last week we have some selling, and the selling is not small. So apparently now, right, it seems that, right, the equity rally has cooled off a little bit, and the concern is back now to the Federal Reserve. And the data, okay, shows that, according to Mike Wilson, he says this, while noting that the expectation of such a result will be growing, the data on Tuesday is predicted to show consumer price increase 0.5% in January, spurred by the higher gasoline cost. And that would mark the biggest gain in 3 months. Now, that is interesting, because that means that Mike Wilson is saying that because of that, the CPI data tonight will not be that good. Okay, so that is something very interesting. And it's a big statement here. In fact itself, he says that the S&P 500 now will be going to 3,900. Okay, that is very incredible, because now the S&P is at 41 plus. So again and again, he has been calling for this. Not too sure is he wrong, but apparently he says that it's because right now the policy remain in restrictive territory in the context of an earning recession, which is very true. So that is one thing to take note of that. Okay, and Bank of America strategist Savita, okay, also come in and says that this is a short covering rally, and he remains a bear market. All right, so again, we have expert all calling in, and they're pretty confident of tonight's CPI data. What do you think? Now, of course, I take a look at the gasoline price, and obviously it's pretty simple, very clear. The gasoline price really went up. So in the December period, whereby the gasoline price really came off, so that is why the CPI data was good, right? Okay, so now the gasoline price has went up by 10%, so it is possible that the CPI data might be high. Now, I went through what BLS has done to the new CPI. Yeah, in the BLS has really, altered the CPI weightage, and it's pretty clear that they move around the gasoline, they move around shelter price and food prices around. And yeah, by right, based on the last statistic, the numbers, it is very possible that today's CPI will be around, okay, 6.5. Okay, I repeat myself, it should be around 6.5 to 6.6 tonight. Okay, so of course, again, you can disagree with me, you have your own views, your own forecast, your own feel, up to you. But the point is this, we can see very clearly now the crude oil price is actually moving up. The crude oil price came down to $72.50 recently, and then it stopped there, and it goes up. And I told you guys that about $77 is a very, $7.50, yeah? It's a very critical Fibonacci level, which the market has break above it. And from the chart view itself, right, it looks like it's going to go to the $84 mark in the near term. In fact itself, I gave a bold call recently. I believe that probably by this year, 2023, we will see $103. Okay, now I've been pretty decently accurate with crude oil. I will explain this again next time, but if you look at me right now, I'll tell you that if you want to buy crude oil for long term, you can buy right now and then aim for 103 by this year. Now, don't ask me when will that happen. I don't know, but it's somewhere within this year. All right, so let's see whether I'm right. But of course, why I bring out crude oil? Apparently, okay, I have some PowerPoint issue right now. Just give me a moment. Okay, no wonder. Give me a moment. Yep. Let me just move this guy in front a little bit to the front. Oops. Okay. Okay, just give me a moment. I think there's some PowerPoint issue here. Oh dear. Okay, just give me a moment. Here we go. All right, bring to the front. All right, apparently we all know that, okay, we all know that Russia has slashed the oil output, okay, such oil output to by 300,000 barrels per day come next month. Every day slashed by that. That is a wow. That will not help crude oil, right? Because apparently there's so much demand on the Russia oil. So US came in and said that, you know what, it's okay. I will sell 26 million more barrels of oil from my strategic oil reserve. So think about this, okay? that if that happens, okay, think about this right now, what will naturally happen, right? So things will get very, very interesting here itself. All right, let me just do a bit of PowerPoint issue here, some changes here. So you can see right now, guys, on the chart view, you can see that the strategic level now is at a very low level, and if let's say US continue to do that, it will go even worse. It's going to be the level back in 1983, 84 level. So of course, Biden's probably doing that because he need to fight with Russia on this area, and with the air balloon going on right now, all this can create a inflation breakout. Okay, all this is very, very possible. So that's why I need you to be very careful on that. But the main thing today is this. All right. Oh, I think it's a title error. Let me just change the title. This should be Nick. Okay, Nick Timiraos. Okay, R-A-O-S. Okay. Now this guy, as we know, he is the chief economic correspondent for the Wall Street Journal. All right. Okay, this over here. This information. Whereby he covers the Federal Reserve and U.S. economic policy. Okay. Now, this guy has been pretty upfront. He is like the mouthpiece of this Jerome Powell. So, apparently, just a few hours ago, he came out a Twitter and says that, okay, it is a bit possible to see the CPI data, or the data that will help CPI to be higher. So, this is the original one. You can take a read right now. You can see that. So, apparently, he's saying that, okay, for any US CPI nerds out there, now is a probably as good as a good time as any to pursue, but use this 2019 Fed papers on the residue seasonality. Okay, sorry, my bad. Right. So basically, he's saying that the core inflation numbers could be higher, and you can actually read on it on your own. And it seems that he is very clear that tonight's CPI data is a concerning factor. Now you look back again. What Mike Wilson say, you look back again what the governors have been saying, you look back again on Larry Summers, you look back at what Jerome Powell say, it seems that they really know that tonight's CPI data may not be that good versus to what the market had been expecting. So this guy, Nick, all right, is like the new crown spokesperson, mouthpiece for Federal Reserve, okay? We know that back then, Bernanke has one, so now seemingly it's another. So all this information now tells me to be very careful, because the last time we see the CPI data that leads to an incredible movement in the S&P was back in 08-09. So are we back to the same point itself? It seems like that, because back then the inflation was at high level, the interest rate was going up, and it seems that it's repeating itself once again. So again, to me, traders, be very careful. There could be a 3% up-down swing today, or this month. Okay, be very, very careful. Now, if you look at it right now, the Wilshire 5000 versus the Fed fund rate, right? As you can see, that when the market is increasing interest rate, the stock market actually accept it and digest this. But the moment, right, when the rate cuts come in, you notice that the stock market will actually nosedive. So that's a point here, guys. A lot of people keep on saying that if the Federal Reserve cuts rates or pivots, right, then the market will go up higher. You're very wrong. It doesn't work that way. So that's my point here, guys. You really don't want the Fed to do this, in fact. So the thing is, be very careful, because the market has peaked earlier, okay? So if the Federal Reserve increase interest rate, that will add more stress. And if really Federal Reserve had to cut interest rate, it's because they know that things gotten so bad, they need to cut. The stock market will react even more, and that will get very bad, okay? So now I tell you this, guys. A couple of days ago, I've been telling you guys to buy some VIX, okay, at 18. I've been saying that, and now it's at 21. Now, yesterday, there's a pullback here. That's fine, no problem. To me, there's an outbreak in the technical, and I believe that this VIX will go up to 26, all right? So buying some VIX today before the market CPI data, if you can purchase it, will be a pretty good idea. I still believe we'll see 32 in the long haul, and in fact, 36 is my eventual target for the next few months, all right? So traders, you make your own call on this. And of course, if you look at it right now, very interesting. The VIX itself is actually going up, as you can see, but the S&P 500 is also going up. So that means that as S&P is being pushed up artificially by some people, the people are also hedging their position on this. So that actually tells me that you should be very careful the next few weeks, all right? And if you look at this right now, if you think it's a soft landing, then think about it again. Whenever the 10-year treasury minus a 2-year treasury, you can see right now it will lead to a recession. And when will that be? I'll give you the date shortly. This is something very incredible that you need to take note. Because now Credit Suisse has just did a very simple calculation. This is the worst earnings season in 24 years, excluding recession. So from Credit Suisse itself, already tell you guys that the earnings are very, very bad. So if it's going to be bad itself, then why would the S&P 500 to be like 5% away from the all-time high? So something is not right. Seemingly someone is just holding and holding and hoarding the market. So to me, put it this way, you can go bull and just put a tight stop loss, okay? For those who want to go bear, just take note yourself. Someone is against you. It might be very hard to play this game. It may drag a bit more until it breaks. This is going to be very important stuff. Because you look at Goldman Sachs right now. Goldman Sachs has been pretty upfront. They don't think there will be a hard landing. They say even a soft landing, it could be mild. But again, when you look at their so-called 13F filing, interesting. They have reduced their calls but increased their puts, interesting. So if you look at it right now, right, they say that the chance of US having a recession is only like 25%. And the thing is this, but their data doesn't seem to be the same. As a matter of fact itself, right, they have been increasing their put, okay, in the market. Of course, you can say that they're hedging it, but why would you want to put a hedge when you are so optimistic, right? Just suddenly doesn't go well. And we all know that Goldman Sachs, if you don't trust them, pinch of salt, okay? Now, one thing is Bridgewater, which is Ray Dalio's, he founded it. Of course, now he retired, but I'm pretty sure he's always around, hanging around, and apparently they have been selling. Look at it right now. They have been selling. Wow, look at it. They have been selling many stocks away. So this is actually pretty clear. They even sold Google. They even sold AMD. In fact, look at it. They sold entire AMD from their portfolio. Wow. So all these tells you that something is not correct, right? Don't you think about it? Now, of course, Bridgewater last few years wasn't very good, but in 2022, they did a pretty good job. So I believe in this, guys. If these guys are doing good last year, you can just continue to take a view on this. And now, this is my own calculation. I noticed that there's a pattern here since 1990 to 2000 to 2008. It seems that about the first time of inversion until recession is about 1 to 1.5 years. So the first time we see an inversion was back in July 2022. So if you put it this way right now, you plus one more year, that will be August 2023, whereby we'll see the recession. And of course, for those people who have heard me my last event, we also have the verdict or the forecast that August itself will be a start or a month to be very careful. Things will get very, very volatile in that particular month. So wow, everything's coming together. What do you think, guys? Do you think that things will get really interesting? Well, stay on with me and you'll see the charts in a short while time. But remember, guys, this is going to be a different segment. I'll see you in the next video. This is Kel signing off for now.